Nikola had announced a recall and sales suspension earlier this week, and despite a shortfall in the stock, we believe Nikola is currently a good buy. So why do we think so? Keep watching as we take you through a complete analysis of Nikola's latest news and price updates. But before we do that, subscribe to our channel $1 World for regular NKLA stock updates. Nikola Corporation, NKLA, has issued a recall for its Tre BEV trucks and suspended sales after identifying the cause of a recent fire incident. A third-party investigator, Exponent, released preliminary findings regarding a truck fire at Nikola's Phoenix headquarters in June. According to Exponent's findings, a coolant leak within a battery pack appears to be the likely cause of the fire. A minor thermal incident involving one battery pack on a parked engineering validation truck in Coolidge, Arizona on August 10th further supported these conclusions. Nikola retracted its earlier suggestion of foul play or external factors as the cause of the incident. The company is currently in the process of filing a voluntary recall with the National Highway Traffic Safety Administration and has put sales on hold until a resolution is achieved. Nikola's safety and engineering teams believe that a component from a single supplier within the battery pack is responsible for the coolant leak leading to the fires. Despite the recall, Nikola has indicated that the affected vehicles can still be used, providing specific guidelines for immediate action by customers and dealers. These guidelines include keeping the main battery disconnect switch in the on position to enable real-time vehicle monitoring and safety systems operation. Parking the trucks outside will facilitate over-the-air updates and improved connectivity with Nikola's truck monitoring system, Fleet Command. Fortunately, Nikola's hydrogen fuel cell trucks, which are currently in the manufacturing stage and set for delivery in the third quarter, remain unaffected by this issue. The company has implemented real-time software systems to monitor trucks in the field, revealing that only 2 battery packs out of over 3,100 packs on trucks have experienced a thermal event. This represents less than 0.07% of the total trucks equipped with these packs. Furthermore, Nikola expressed uncertainty about its ability to sustain its operations for the next 12 months as it awaits critical additional capital. On Monday, there was a significant drop in Nikola's stock, NKLA, following the company's announcement of a voluntary recall for all 209 of its battery electric trucks due to a fire risk. Nikola has also decided to temporarily suspend the sales of its Class 8 Tre battery electric trucks until a solution to the issue is implemented. For the trucks still in operation, the company is advising owners to park them outdoors. The Tre battery electric trucks by Nikola, priced around $300,000, are eligible for commercial EV tax credits. Nikola's newly appointed CEO, Steve Gursky, who took on the role less than 2 weeks prior, emphasized the company's dedication to safety. He stated that Nikola had committed to providing updates as investigations progressed and reiterated the company's transparency in sharing information as they learn more about the situation. Enjoying the video so far? Be sure to join our Discord community to connect with other like-minded investors. Let's look at some stock news of Nikola. The current price of Nikola stock stands at $1.91, showing a positive change of 9 cents. 4.95% from the previous day. The stock had reached a 52-week high at $7.10 on August 15, 2022, while its lowest point was 52 cents on June 6, 2023. The trading session opened at $1.90, reaching a high of $1.91 and a low of $1.78. The stock experienced a trading volume of 81.37 million shares. Despite a significant decline from its 52-week high, Nikola's stock has displayed recent upward momentum, with today's increase of 4.95% following a 2.13% drop yesterday. According to analysts' recommendations, 6 analysts suggest holding the stock, 1 analyst advises buying, and no analyst recommends selling. The median price target set by analysts for Nikola's stock is $2.50, indicating a potential upside of 26.90% from the current price. Nikola, the electric semi-truck manufacturer, has left many investors with significant losses since its initial public offering. The company entered the public market through a merger with the Special Purpose Acquisition Company, or SPAC, led by former General Motors Vice Chairman Steve Gursky on June 3, 2020. The stock began trading at $37.55 per share since its debut and rapidly surged to an all-time high of $79.73 within just 6 days. However, the situation took a dramatic turn, and presently, Nikola's stock is valued around $2 per share. This steep decline in stock price is attributed to the company's increasing losses and its inability to meet the ambitious delivery targets that it had set before going public. Adding to these challenges, Nikola's founder and former CEO Trevor Milton faced legal trouble, being found guilty of securities and wire fraud the previous year. The situation was further aggravated by rising interest rates, which significantly impacted the value of speculative growth stocks, intensifying the downward pressure on Nikola's stock. Nikola experienced a brief resurgence in its prospects earlier this year due to several positive developments. The company successfully increased its deliveries of battery electric vehicles, or BEVs, reaffirmed its commitment to delivering its first hydrogen-powered fuel cell electric vehicles, FCEVs, within this year, and secured a substantial 5-year order for 50 FCEVs from Biotech, a hydrogen fuel and transport equipment provider. Adding to this positive momentum, the California Transportation Commission approved a $42 million grant to support Nikola's collaborative effort with partner Volterra in constructing 6 hydrogen stations in Southern California. As a result, Nikola's stock price has rebounded significantly, nearly quadrupling from its lowest point of 52 cents per share on June 6th. In other news, one of the final decisions made by Nikola's departing CEO Loschler was to approve a plan that would effectively double the company's available shares from 800 million to 1.6 billion. This strategic move aimed to generate additional funds through the sale of new stocks. This step could potentially bolster Nikola's financial position, as demonstrated by its Q2 balance sheet, which recorded a nearly twofold increase in cash and equivalents to $227 million due to divestitures and cost-saving actions. The move also serves the purpose of securing the necessary funds for settling overdue interest on a $200 million loan obtained from Antara Capital, a hedge fund, in the prior year. However, this move would result in the dilution of existing investors' shares, as the market would be flooded with new shares. There are 2 notable concerns associated with this development. Firstly, Nikola's stock valuation is already relatively high, priced at 11 times this year's sales, assuming it meets its battery electric vehicle delivery target. The doubling of the shares could elevate this valuation further, making it even more expensive. Secondly, there's a level of uncertainty regarding investor interest in purchasing Nikola's shares following its recent setbacks. This could potentially lead to the company having to sell its new shares at a discount. Taking into account these challenges, the future outlook for Nikola appears to be less promising. A Nikola stakeholder said that hydrogen fuel cell vehicles possess a distinctive feature known as the power curve, which is a consequence of the higher energy density inherent in FCEVs compared to conventional battery electric vehicles, or BEVs. To illustrate this concept, let's consider an analogy involving a battery electric leaf blower versus a corded leaf blower connected to a household power outlet. In the case of the battery electric leaf blower, its performance diminishes rapidly. This reduction in power occurs because the stored energy within the battery is quickly depleted and its energy density declines over time. On the other hand, a corded leaf blower plugged into a house power source maintains a consistent level of strength throughout its operation. A hydrogen fuel cell electric vehicle HFCEV exhibits a continuous and robust power output, much like a device connected to a constant power supply, which in this case is the fuel cell. While this explanation is simplified, it aims to provide an understanding of the concept. In practical terms, a plain BEV might encounter difficulty when tasked with hauling a load like a load of potato chips, as its power diminishes with the consumption of stored energy. In contrast, an HFCEV has the ability to effortlessly pull a substantial load uphill, seemingly unaffected by the weight it's carrying due to its sustained and consistent power output, akin to being connected to an unvarying power source. The sentiment surrounding Nikola's stock is overwhelmingly bullish, with a majority of investors and analysts expressing optimism about its future prospects. This positive outlook has led to criticism aimed at individuals and various websites that hold a bearish stance on the stock. The prevailing sentiment among those bullish on Nikola is that the company's recent strategic moves, including increasing its share count and progressing with its hydrogen fuel cell electric vehicle technology, will lead to improved financial health and market performance. However, it's essential to note that differing viewpoints and healthy skepticism are inherent to investment discussions, contributing to a comprehensive understanding of the stock's potential trajectory. Remember that this is not financial advice, and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think the stock will make you rich or not in the comments section. Hit like and subscribe to our channel $1 World for more such penny stock videos, and we will see you in the next one.